I was asked a question by a startup entrepreneur about my tips for him on how to get his first startup acquired. Clearly, the best thing for me to do is write a blog post. So, let's get into it, friends. My first startup was acquired in early 2014. I became a multimillionaire and financially free after my acquisition. Then, I built my first venture fund, and then re-enslaved myself to powerful people that same year. Probably an unwise decision. Anywho, here are 7 tips for those who want to get their startup acquired. Number 1. It's always relationships. Startups don't get sold, they get bought. Read that again. Startups don't get sold, they get bought. Be a relevant acquisition target and network like hell all the time. This could be channel partners or companies with whom your product can integrate. As you're crossing the $500,000 mark in revenue, you want to ping your network and let them know your growth. Focus on building, never selling. Your network will bring you a buyer. Number 2, sell when you don't want to sell. You can negotiate a higher price when you're focused on building. Go for the price of least regrets. Quote a price so high that if they don't take it, you're good. If they do take it, you're golden. Number 3, clinical record keeping. I pride myself in books that are clinically clean and ordered. No mixing of personal and professional spending or accounting here. Reconciling your bank to your spend is not something you want to get flagged on. Who can trust someone who can't keep good financial books? Number 4, be a big fish in a small pond. Deliver a great product, time in and time out. Nobody cares if there's competitors. There are competitors everywhere. Acquisition targets are fire starters in mature industries. Do one thing better than your competitors, and frankly, that might be good enough to demand a higher valuation. Number 5, crack the $1 to $5 million revenue mark. Less than this, and your product might not be a good product market fit, and it might not be solid. You haven't found your product market fit. If you're doing more than $5 million, well, then you might be too expensive on a multiple. So let's hope you've been networking like crazy as you're building up to the $1 to $5 million range. And right now, I'm in a great place because I'm helping 3 startups get into this window right now. And it's super exciting, positioning them for acquisition. That's where we win. Number 6, cash is king. You deserve a payday. Negotiate enough cash that even if you have to write off the stock component, it doesn't make you salty and bitter. Shares are vaporware. They really are. If you're going to hold shares, make sure you hold your own shares, because your own shares are more important than the shares of the acquiring company. Get paid. Take the cash. You'll feel better about it, even if you have to do a huge tax on it. And number 7, speed is a must. This is why I've been training Agile and Scrum for the last 2 decades. It's the greatest weapon for startups. Grow fast, you have a premium price, and the numbers go up. 30% year on year is good growth. Above 50% is fantastic. Check for valuation multiples of other companies in the market to get a benchmark. But at the end of the day, you need to build faster than them. So, final point. Did I say relationships? Of course. You may notice on my X feed that I'm all over the world all the time. More relationships mean more opportunities, mean more doors opening, means more warm introduction, means more. It doesn't matter if they're not going to give you money. Networking with investors at all times is a good thing that must happen. My first startup was acquired because I began the work 2 years prior into the investment world. You saw the picture of my text to my wife in one of my first investor meetings and conferences. I was like, I don't know what's going on. But from that first investment meeting 2 years later, that's when an acquisition individual and an entity came to me and said, hey, we've been noticing, we've been seeing, and those 2 years prior, in 2012 to 2014, that's where I was networking with investor groups to let them know I was building something, and it had good traction. It was profitable. It was making money. And eventually, someone came in and said, Peter, let me take it off your hands. I knew I had something worthy, but I didn't know what I didn't know. So I had to network, and network I did. Once again, the reason I wrote this blog post is because the past weeks I've been doing meetings with investors, private equity, family offices, institutions, etc., even if they don't invest in my portcos or invest in the startups that I'm investing in. I'm so sick. I'm such a sick person, guys, that I ensure that when I go on vacations to different destinations across the world, I always include meetings with investors in that area from my larger network. It's all about the networking. They know people. These people can help you. And so continue to build fast and network more. That is what it's all about. Finally, one of my portfolio investments are helping business builders increase their network so that they can win even bigger. Make sure that you check them out. Their next conference is in 6 weeks. All the best.